With us now, Ed Yardeni. He is Yardeni Research, with Yardeni Research, the president, of course. Ed, it's good to have you. What do you make of what's happening, the price action in the market today?
Well, I think a lot of this is the market recognizing that there's a recession out there. It's just not in the United States. It's in China. And so a lot of the stocks that have exposure to the Chinese market, there's lots of companies who thought that there was nothing but upside in the Chinese market are now realizing that that economy may be slowing down substantially and the consumers aren't buying the way they had been.
I mean, you say that. I think about Apple, obviously. I mean, 20% of revenues come from there. It's just one of the issues around that stock. Let me ask you this. You've seen a lot of markets, okay? You understand what it means clearly when one of the biggest stocks within the market goes through a period of selling. In this kind of market, what's the implication of that in the broader picture if Apple does, in fact, go through a prolonged period of being broken?
Well, you know, Apple hasn't repeated the mantra AI too often. As a matter of fact, they've gotten out of the self-driving auto business for now. And so they're kind of viewed as yesterday's story, and it's just not an AI story. Look, in a couple of weeks, NVIDIA is going to have this convention in San Jose, which is going to be a great AI fest. And I think that's going to continue to be a positive for the technology area, particularly the semiconductor area. So I think we're getting some splitting here among the mega cap 8, or mega, the magnificent 7, as some call them. They're not all that magnificent. Tesla's got some problems. Apple has some problems. And it's actually good that the market's starting to be a little bit more selective, and I think it's going to broaden.
Well, you were one of the first, I think, to use the word exuberance in this current cycle and in the current market rally. I mean, that was like 100, if not 200 points ago in NVIDIA, and a substantial amount of points ago in the biotechs, and a substantial amount of points ago in some of these sectors that have just absolutely gone bananas. Does that concern you?
Don't forget Bitcoin. Don't forget Bitcoin.
Okay, I'm not. But, okay, you continue to paint a picture, though. What does it tell you?
Right. Well, we have exuberance out there for sure. I think some of it is rational. Some of it may be becoming irrational. But right now, as we've seen with NVIDIA, the forward PE of NVIDIA has actually come down because analysts have been raising their earnings estimates so much faster than the price has gone up. So the fundamentals, I think, are there for the economy. I think some of them are maybe overstated to a certain extent. But right now, I would put us more sort of, if we're looking at the 1990s, which was the last time we talked about exuberance, I don't think we're at 1999 just yet.
You worried at all about what the chair might say tomorrow on the Hill?
Well, I anticipate that he'll say, don't get excited about us cutting rates. We're not rushing to do it. And he might actually say some things that suggest that there's a possibility they might not lower interest rates at all this year. And the reason for that is the economy is doing fine, inflation's coming down, and the economy is doing just fine with interest rates where they are right now. I have not been in the camp that thought that we would get several interest rate cuts this year. I think the Fed has actually normalized interest rates, and they're perfectly good where they are right now.
Well, I can't imagine that if Chair Powell, and he's not going to say this, I can't imagine, though, if he does say we're not going to cut rates at all this year, that the market just says, okay, hey, we're good. The economy's great. Because the durables report today was the weakest in like 4 years. And ISM services today was below 50 yet again. That doesn't sound like an economy that's necessarily going gangbusters. I get the pockets of strength, but let's be a little tempered in how we view what's actually going on out there.
I agree with you. And I am not rooting for I'm certainly not rooting for irrational exuberance. I'm not rooting for a melt-up. I'm rooting for 5,400 by the end of the year, not by the middle of the year. And for the past few weeks, it almost felt like we could get there by the middle of the year. So I have no problems with the market taking a break here. Not a major break, of course, but a break. I don't think we're going to get a 10% correction out of this move. Again, we've got NVIDIA's conference coming up, and a lot of the excitement has been about technology, particularly AI related.